Welcome to episode 9 of the 5-Minute Investor Podcast, where Stockhouse columnists Jon Brown and me, Trevor Abes, each deliver a 2.5-minute stock pick related to recent news stories with investment implications. John, where do you think investors might find reasons for conviction in the market this week?
Well, Trevor, here's a story. We've been actually following this on Stockhouse for a while now. I was up late thinking about this one. It's Alimentation Couche-Tard. Hope I said that okay. You know, it's a convenience store giant. They own Circle K. They're in our lives more than probably we even know. They've been very vocal about their intent to acquire the company 7&I Holdings. They're the ones, the Japanese company who controls 7-Eleven stores. Couche-Tard, they want to expand their global reach. But 7&I, they've not been budging, no matter how much the deal gets sweetened. It was $38 billion. That wasn't good enough. Now it's $47 billion. That wasn't good enough. Or is it? Two companies just announced that they've signed an NDA, a non-disclosure agreement, so that Couche-Tard can access 7&I's financial data. This can be a real big step forward for what could be the biggest takeover of a Japanese company by a foreign buyer. But the full day of following this news, Couche-Tard stock, which trades in the TSX under the symbol ATD, lost like 1.5%, and it's been down over 4.5% since the year began. But I bring this up now because, like I said, this is a big acquisition, and if it goes through, and the stock is up more than 2% last year, could prove to be a good time to get a good deal. It's not exactly cheap. It's been the $70 range a share since summer of 2023. But if it does go up from here, you can consider this a better deal than 7-Eleven hot dog. What do you got, Trevor?
Well, John, my focus for this week's episode is on Theralase Technologies, ticker TLT on the TSX Venture Exchange, market cap $43.36 million, and the company is a clinical stage pharmaceutical operator with an early stage wonder drug on its hands. Known as Ruvidar, the company's lead drug candidate has shown strong preclinical results against lung cancer, non-Hodgkin's lymphoma, diabetes, immunotherapy and chemotherapy resistance, as well as numerous viruses, including herpes, H1N1, influenza, the coronavirus, Zika, and pox virus. This is in addition to favorable clinical results for the treatment of bladder cancer, with a phase 2 non-muscle invasive bladder cancer clinical study wrapping up in 2025 to be followed up with a Health Canada and FDA regulatory submission in 2026. Ruvidar's success against non-muscle invasive bladder cancer boasts higher durations of response than any medication in the market or in the regulatory approvals process, granting Theralase a differentiated position in a market the company estimates at about $8 billion per year, with commercialization envisioned sometime in 2027. All in, Ruvidar's growing use cases represent tens of billions in potential value, and perhaps more, should the company's research efforts continue to bear fruit. With Theralase's stock down by about 46% since 2015, investors have a chance to buy into pessimism and risk adjust their position, resting their conviction on an abundance of early stage evidence, but evidence nonetheless, suggestive of Ruvidar's diverse ability to meet unmet medical needs and generate exponential shareholder value. As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever you find your podcasts. Thanks for listening, and we'll catch you next time. The material provided in this podcast is for information only and should not be treated as investment advice. For full disclaimer information, please visit themarketonline.ca/disclaimer.